China, I don't know if you've seen the Chinese stock market, and even if you don't trade these things, I just want to take a pause because we're going to talk about some markets that you might say, Nick, I don't trade Chinese stocks. I don't trade individual stocks. I don't trade indices. I don't trade gold. I don't trade. You get those comments all the time. But if you are truly here for the right reasons, you're a fundamentalist or an aspiring one, that you want to actually understand what's happening in these markets, not just stare at candlesticks all day. If you want to understand it, I want you to shrug off the idea of I only trade gold or I only trade euro dollar. If you are truly a fundamentalist, you trade a bit of everything. If you are really looking at the macro, you can't just look at one thing. That doesn't exist for macro traders. Macro traders look at the full canvas to make a more informed decision. So when we talk about China, right? The Chinese government, think about how they feel right now. The Chinese stock market has been down in the dumps for years. Meanwhile, its Western counterparts are having their stock markets rally to all-time highs. The US stock market, the German stock market, even the Japanese stock market, right? The Indian stock market, all these other stock markets globally, a lot of them are doing very well. And China is the second largest economy in the world, and their stock market is getting crushed. Well, they probably don't like that. A bit of a contrarian play this year has been being bullish on Chinese stocks because there's a lot of sketchy stuff that we don't know for sure, what Chinese stock number or financials actually look like. There's questions about the authenticity of numbers put out by China. But one thing is for sure that I like to keep an eye on, which is China probably doesn't like being in last place with their stock market. And they've begun introducing more aggressive stimulus. That's why the stock market, we could just take a quick pause here. I can show you just for reference to what I'm saying. The Chinese stock market had a ginormous burst of energy that has faded a bit here, but still has really, come back from where it was, right? You've had a big burst in Chinese stocks. I wouldn't be surprised if there's more stimulus coming to try and continue that push, because again, China probably doesn't like being in sort of last place with their stock market. It doesn't look good to their sort of mantra. A pickup in Chinese activity, however, is very important, not for just trading Chinese stocks. It's very important for industrial commodities. What are industrial commodities? Well, everything. Remember, what is China? China is the second largest economy, and it's a manufacturing superpower. They manufacture everything. So if they're manufacturing everything, what do they need? They need raw materials. They need commodities. They need oil, right? So if China has their economy start to see a comeback, like a stronger, persistent rally, watch commodity prices, because right now commodity prices don't look too hot, right? You've got copper down. Silver looks great because it's kind of following along with gold. Oil is low, right? So keep an eye on this, because this could be inflationary to a degree if you get oil prices spiking on Chinese strength coming back. So this is a very important thing to keep your eye on. And China, again, has the potential to seriously increase the demand for raw materials and commodities. That's not something, however, that I'm looking to go take a wild bet or gamble on to say, oh, I think it's going to come roaring back, I'm going to go long the Chinese stock market. It's something to watch for. And if it begins to seriously pick up some steam, right? If you start to see the Chinese stimulus packages be more aggressive and hope is sort of restored to the Chinese economy and stock market, then we're going to take a different look at oil. We're going to look at commodities a little differently, because now the manufacturing powerhouse is back. The Australian dollar, by the way, a huge exporter to China for raw materials, may look a little bit different if you have this scenario. Again, I'm not calling that scenario. I'm saying watch out for it. And if it starts to form, I'm a momentum trader. So I'm not super contrarian in my trading. On certain things I am, like sentiment wise, sometimes I can get some contrarian setups, but I don't care to be the first to the trade. I care to join a trade that is beginning and picking up real steam. So typically I'm more of a trend follower. I'm more of like, oh, this is beginning. I think it has potential to continue. I'm joining. So the China trade is on my watch list. Let's keep going because China is really important, but so is this topic right here.
Hey traders, Chandler the editor. I'm coming in to tell you about our 2 free Telegram channels that you can join. Links are in the description. One all about trading, and the other all about stocks. So we have 2 Telegram channels. We're constantly putting content in them. So make sure to join both of those free of charge down below.
We've talked about it consistently for weeks and weeks and weeks. The election, what does it mean? Where is it going? Who's going to win? Well, we've got some interesting dynamics to play through here because now we have, regardless of whether it was Trump or Harris, one of the big questions for markets was, is it going to be a decisive winner at all? And the answer is yes. We had a winner, right? Trump won the popular vote and he won the election. Trump's return to office poses some very interesting questions for markets. On one hand, we've seen a burst in energy for certain sectors, stocks, indices, Bitcoin. Essentially, we've gotten a ginormous risk-on move because at least the first reaction here to Trump's return is we had the guy in office, whether you like him or dislike him. I'm not, from just purely a market standpoint. If you dislike Trump or you like Trump, let's put that to the side and let's just talk about what the market is telling you it thinks is going to happen here. Lower taxes and looser regulation for business activity is why I think the stock market has ripped and had one of its best weeks all year long in the last 10 days or so. Because if businesses are allowed to see lower taxes, obviously that's more money they get to keep. So stocks go up from that. But regulation is the key here. Specifically, we've seen a very large lack of M&A in the United States. Capital markets have been kind of a dormant space. And what I mean by that is companies buying each other and becoming super, strong, which, again, regulation sort of puts some checks and balances there. One sector of the stock market, which is an area of the stock market, financials, banks, services in the financial world, right? They have exploded in the last week or so because the idea is if there's less regulation, those companies can start to administer a lot of M&A, mergers and acquisitions. Companies can buy each other more easily. They can become bigger. And that activity is very beneficial to banks who sell that as a service, right? They do the IPOs on the market, right? So when a new stock comes to the market, there's a business transaction. There's a big, process that goes into that, and banks stand to gain a lot. So financials are an interesting sector in my view, but in general, stocks are rallying, and I think it is a potentially sustainable rally. I think we probably pulled forward a little bit of the gains here. We've had a huge move up, and I'm not necessarily saying I'm going out and buying stocks today, but generally speaking, a Trump administration is perceived as by the markets more favorable towards companies and their earnings. So that's something to think about. However, it's not all easy because we also have another dynamic. Trump likes to spend a lot of money, and he also likes to have interest rates very low, right? So that could add a lot of money to our national debt. That could also mean, how do we pay for our national debt? We print more money. What does printing more money mean? Inflation, right? So one thing that I'm very cautious about with the return of Trump is these tariffs, the low interest rate, the many measures that Trump is going to put into place with a red sweep. One of the biggest concerns would be inflation. It's a very real concern. And in my opinion, if a lot of these things start to get passed into law, there's the potential that the Fed and the bond market may actually be the gatekeeper to some of Trump's activities. What I mean by that is that interest rates may not be coming down as quickly under a Trump administration, simply because a lot of spending might go on, right? It's not the end of the world. I'm not saying, oh, this is going to cause a massive, impending dooming event, but it's worth mentioning that, again, high spending plus tariffs could be inflationary. We don't know for certain, but it's something to really consider. And so perhaps that means a stronger dollar. Maybe it means yields stay high. And if they go too high, then yes, it could check the stock market and cause some corrective moves. But we see the dollar up substantially in the last several months. If you've seen that, again, following Trump's victory, there was a huge surge in the dollar and in yields. The bond market thinking, again, that his activities could be considered or could come out to be very inflationary and cause some difficulties for the markets. The question also is, will he depose Jerome Powell? This is another concerning question. When Trump gets into power, yes, he cannot. Jerome Powell mentioned on the stand, someone actually asked him, if Trump asks you to resign, would you? And he said no. Basically, I think it's Congress that has the power to remove Jerome Powell, but it's a very red government. So there is still the possibility that if Trump is insistent on finding a way to get Jerome Powell out of his position, that could potentially happen. Why does that matter? Well, the president appoints the Fed chair. So the next one could be more of somebody that he could more easily tell what to do. So these are risks. And I believe that's 2 years out from now when that re-election or the term for Powell ends. Somebody can please tell me the logistical mannerisms there or the legal process. I'm not sure how that function works, but I believe at the end of it, the president appoints the next one. And believe it or not, Trump actually appointed Powell the first time around during his presidency. So we'll see, but they've had some headbutts recently. They don't seem incredibly fond of each other. And that is a big question for markets as well when that time comes for, his position. So let's keep going. And the next thing I want to tell you is that regardless of, and I really don't want to spend too much time on politics here today, but some of the policy stuff is worth discussing. Regardless, though, whether you had a Democrat president or a Republican president, the market goes up under both. Not always and not every year. Some years you have horrible red years. But what we actually have is a Republican president and a Republican likely Congress, right? The market actually likes division of power, but that's not what we've got. We've got a pretty much red sweep. And so, just wanted to show this chart because it's not, a significant difference, but this is going back from 1933 through 2022 and excluding some crazy outlier years where we saw massive, massive drops, I guess. 2001, 2002 was a really rough period in the stock market. So my point here being, this is sort of the scenario that we have, and just should be noted. It's not particularly better or worse than the others. Stock market also. I mentioned at the beginning of this video or this conversation that we have different cycles in mind. Post-year election or the year following the election, there's the pre-midterm, there's the post-midterm, and there's this pre-election. This happens over and over and over in the U.S., and it's a cycle that we should be well aware of. Well, look, we've got the post-election, year one of a Trump presidency is in 2025. And that is expected, based on this study that was put out, to be an 8.3% gain on average for the first year of not just a Republican, but any president, right? The midterm year, pre-midterm year is a rougher year as people are sort of uncertain about what's going to happen with Congress, etc. And then year three, post-midterm, now that is out of the way, things go better. And then for pre-election year, which, by the way, was 2023 and 2024 sort of benefited that. Usually a pretty good time in the stock market because the current standing president wants to make things look as best as possible. So there's usually a lot of spending. Oil prices typically go down. It's interesting how repeatable some of these cycles really truly are, and it doesn't matter party. This is just what humans do, right? We have some repeatable expected things. If I was the president, I would spend a ton of money that in the end of my term to make things look good. That's what everybody would do. It's not oh, the Democrats do this or, oh, the Republicans do this. It is just what a president does. And so some of these repeatable sort of averages can be very interesting to keep an eye on. Just wanted to share that. Also, here's some sectors. I thought pretty much my takeaway on this, all the different sectors: energy, comm services, financials, industrials, consumer discretionary, consumer staples, utilities, technology, materials, healthcare. What I noticed here, it's pretty evenly distributed. There's not a massive favoritism under a certain color, red or blue, Democrat, Republican, showing the performance of those. So just wanted to show that, again, although sectors and stocks, you can get all fancy with it, I really think that the president is important, but it's not everything. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.